Is it better to invest in rental property or stocks? Stocks or real estate? Everybody debates it, but here's the truth. One builds wealth passively while the other builds wealth actively. In this video, I'm going to compare rentals versus stocks and help you see which one's better for you. You'll know the key difference between investing in real estate and stocks so you can choose which aligns better with your goals. Look, as much as I want to give an objective opinion here, I have to tell you that I have both, and I lean towards real estate investing because I'm a real estate investor. So you'll probably notice in the tone here, I'm going to give you pros and cons of both as we go through everything, but I am primarily a real estate investor. I have some funds in a 401k. I don't track them that much. I like my real estate investing. There's something about being able to drive by and see a property that you own that's very proud. I can't drive by a stock report and see what I really own. It's a piece of paper. But a house has this really cool feeling of ownership when you drive by it. That sucker is mine. And we have multiple houses on multiple streets, so we drive along and go, there's that one, there's that one, there's that one, and it's a pretty cool experience when you drive down. So I'm a little bit biased towards real estate investing. Let's talk about some details. I think this really comes down to what are you more comfortable with? Stocks are definitely more of a passive income because you put your money in and you really have no say past that. What happens, happens. What I have noticed is that people that are in the stock market tend to be on a roller coaster ride depending on what kind of stocks you're in. If you're in more secure stocks that pay a lower interest rate, well, they may not be as volatile. They may stay at 5%, 6%, and they may stay right in that general area. There's still some fluctuation, but day to day, week to week, month to month, but they're still there. If you start to go after some higher returns, anything 10 and above, 10% and above as a return, you're going to find volatility, meaning that when the Fed says something on the news, it changes. When the president says something on the news, it changes. When there's bad news, the stock market changes. And it's up and down and up and down. And what people don't like is when they get closer to retirement age and the up and down becomes it's down when I need cash out. And that's what makes them really concerned and really nervous, and I get it. So what I've always told my private lenders that invest with us, we pay right now 12% on the money that people loan us for private deals. And you can learn all about being a private lender in our site. Subscribe here if you want to learn more about that. But for now, we pay 12%. And I tell people up front, so look, if you're used to the stock market, I'm boring. I'm just 12%. I just do this, up and up and up. That's just 12. I pay a 12% APR on the money we borrow from you, and that's it. Month after month, you get a statement from me, and you make 12%. That's what we pay on the money we borrow for our flips. The stock market, you might make 4%, you might make 20%, 4, 20, 12, 2, 8, 4, 2. And if you can't stand that roller coaster ride, if you like the roller coaster ride, by all means, stick it out. But I think sometimes when people get older, they're like, okay, enough with the ride. I don't know about you, like I broke 50 and I go on a roller coaster, and as much as I still like it, I get a little sick in the head. Right? I'm like, whoo, okay, I'm a little bit whooshy on that one. So I think people get to a certain age and they don't like that volatility. So the choice is I go to a more stable stock investment, maybe T-bills, maybe something a little more simple that they can invest in. They know they're going to have a guaranteed return in the market. Or do I keep going for a higher return and live that volatile up and down life? And that's what it comes down to. It's really a personal choice for you. What do you want to go after? Because you may want to cash out at a time when the market is low. Or you might panic in a bad situation. Now, if you've been around long enough and in the market long enough, you remember 2008. You know, one of my top investors I have for my company made a horrible mistake for his family at that time. He had over $800,000 invested in the market back in 2008, and when the market tanked, he got very nervous and scared, and he sold everything at the bottom. He sold out at about $400,000 and didn't know what to do with the money. I just so happened to send him a letter saying I'm looking for private investors, and I was able to get him as my private lender, and he still is to this day. It took him many years for me to decondition him to be in the roller coaster ride and realized how steady we were, and now he loves his check he gets every month. But it took a long time because he was so used to that world, but he sold out at the bottom, like many people did. Because you're trying to time the market. The stock market is more of a passive income. You put your money in, you let it ride. You just have to be able to stand the ride. Real estate investing, much more of an active income. If you're going to be a real estate investor, not a private lender, but a real estate investor buying houses, you're going to have to find the house to buy. You're going to have to manage the property manager. You'll have to manage some renovations from time to time. You'll have issues that come up from time to time. There's things you take care of like paying the insurance bill, paying the taxes. There are things that you have to do, so it's a much more active investment. However, You get tremendous tax breaks by investing in real estate. You get what's called depreciation. And now you can get what's called accelerated depreciation, which means you can write off the depreciation of that asset instead of going 27 and a half years. By the way, I'm not an accountant, so these numbers could be a little off, but instead of depreciating over 27 and a half years, you can now depreciate over like 5 years. Like you could really accelerate that depreciation, and that will offset your active income. So if you have an active income of $100,000 and you can buy enough rental properties to offset through depreciation your active income, you could actually pay no taxes on your active income. Did you know that? There's a lot of tax benefits that you get with real estate investing that you simply do not get with stock investing. With real estate investing, you can take out your equity in the form of a loan. You can go get a loan and take out money. So if I have a rental property with $100,000 in equity, I could most likely, as long as I have good credit, go to the bank and take out a loan using that property as collateral, and I would take cash out of my equity, like a home equity loan, but take it out of the property. Guess who pays back the monthly payment? Your tenant. So you're not paying it back, but you have cash in your hand that's what? Tax-free. Because it's not money you took out, it's a loan against an asset that the tenant's gonna pay for you. Try and do that in the stock market. In the stock market, if you take money out, you're gonna pay. You're going to pay capital gains tax on any gains you've had in that stock, right? So you don't have that same option. There are options to take a loan out against your assets, but it's not quite as fluid as it is with real estate investing, or not quite as clear. But what I can tell you is this. If you want to have an investment portfolio that gives you instant access to your cash, the stock market's the way to go for you. Because you can sell your stocks in a day and have your cash out, right? Real estate is not quite the same. You have two options. One, you take a loan against the equity. That'll take usually 30 to 60 days to get the money out. Or you can sell that asset and take the money out that way. Now, those take time. For me, what was really helpful is that in real estate investing, because I didn't have access to money that quickly, I found other ways to fix my immediate problem besides selling my asset. Does that make sense? So like if I needed $100,000 quickly for something, I needed cash flow for the business. I had to buy a car for the kids. Not a $100,000 car, but I had to buy a car, whatever. I needed cash for something. I wouldn't just go sell off my stocks to do it because that feels very instant. I can just go, hey, call my broker and say, listen, I need $50,000, just sell off some stocks. Boom, I got $50,000. I'm paying tax on that money, so I'm gonna have to sell $75,000 just to get $25,000 or to get $50,000, right? However, I'm selling off a piece of my future. What did I do if I have real estate? I can't get access to money that quick, so I think differently. How can I get this done without dipping into my future? Does that make sense? So real estate almost hedges you in the direction of you're in this the long term. You can't get out that quick, so don't even think about it, buddy. Now, because owning real estate can be a little challenging when you get older, I'm starting to think about my family. Do I want to leave them 100 houses, 200 houses? Or do I want to cash that out and put it in some kind of investment where it's just a simpler way to divvy up the money? And the answer is, I don't know. But I am thinking about it. And it's making me think about, do I want to use both in my strategy? So I don't think one is worse or better than the other. I certainly think real estate's better from the tax benefit standpoint, from the being able to take my equity out and have the tenants pay it back, from a long-term way that I can build wealth without using any of my own money. That's a very, very powerful strategy, as you can imagine, that you can't do in the stock market, and so many other things that I like real estate. However, when it comes to liquidity, stocks have it beat, hands down. Because if I were to die tomorrow and my wife were to pass away tomorrow and the kids had to divvy up the money, getting rid of 50 houses is a complicated mess. No question about it. So I'm starting to think more about the future and what that looks like to them. And what I may or may not do, I may take a portion of those or all of them, and as they become vacant, I may sell them, or I may flip my own houses because I'm good at that, right? Make them look great and get as much as I can in equity. Sell off the house, get the cash, put that in the stock, in the investments, and then be able to have the kids have that liquid cash available to them. By the way, on a side note, they won't get it till they're a lot older in life. They don't get that quick. I have that all set up already, so that's it. But you have to decide at the end of the day what's better for you, stocks or real estate investing, and I hope this video was helpful. Whether you choose stocks or rentals, you're gonna need clarity on your lane, especially if you're going into rentals. So go watch my next video, the crucial step new investors always miss, so you can learn how to build what I call your buy box. If you are using rentals as your means to wealth, you're going to want to know exactly what kind of a rental you want to buy, and this video will clarify it for you so you know exactly what you're looking for. It's right here. Go check it out now.